The used car you're about to buy is probably going to cost you twice what the price tag says. Not because you will be ripped off, not because anything will go wrong, just because nobody buying a used car ever calculates the actual number. They see the asking price. They think about the monthly payment, and they drive off a forecourt having made one of the most financially consequential decisions of their year, based on about 30% of the real information. This video is the other 70%. Let me tell you about Tyler. Tyler is 27. He needs a car. His current one failed its inspection, and the repair bill is more than the car is worth. He has $6,000 saved. He finds a 5-year-old Honda Civic with 68,000 kilometers on it at a dealership. Asking price? $16,500. It looks clean. It drives well on the test drive. The salesperson is friendly and unhurried. Tyler does the mental calculation he always does when buying something. Can I afford the monthly payment? Yes. $280 a month over 5 years feels manageable. Is the price reasonable for the car? He checked a few listings. Seems about right. Does it seem like a good car? It feels solid. No warning lights. He buys it. 6 months later, Tyler does a calculation he did not do before buying. The car costs $16,500. He put $3,000 down. The loan, at an interest rate he did not scrutinize carefully, is costing him $280 a month for 60 months. Total loan repayments, $16,800. Plus the $3,000 down payment, he will pay $19,800 for a $16,500 car. He discovered the previous owner had skipped 2 scheduled services. A timing belt that should have been replaced at 60,000 kilometers was still original. Replacing it before it fails, $900. His insurance quote came in $40 a month higher than his old car because of the model and his age bracket. Parking in his city, $180 a month. Annual registration and safety inspection, $340. Fuel costs on a car slightly less efficient than he expected, approximately $1,800 a year. Tyler is spending approximately $8,400 a year on a car he bought for $16,500. He knew about none of this when he decided he could afford it. Tyler did not make a bad decision. He made an uninformed one. And in the used car market, uninformed is expensive. The used car market has specific economic characteristics that work against buyers who do not understand them. Let me give you the 3 that matter most. The information asymmetry problem. When you buy a used car, the seller knows significantly more about the car than you do. They know its full history. They know what was repaired and what was not. They know what the warning lights showed before being reset. They know what the car sounds like after sitting overnight in cold weather. You get a test drive and whatever they choose to tell you. This information gap is priced into the used car market in a way that consistently disadvantages buyers who do not take specific steps to close it, which we will cover in the solution section. The true cost of ownership versus the purchase price illusion. The purchase price is the most visible number in any car transaction. It is also one of the least useful numbers for understanding what the car will actually cost you. The true annual cost of owning a vehicle includes financing costs or opportunity cost of the cash used, insurance, fuel, maintenance, registration, parking, and depreciation, the value the car loses each year. Most buyers calculate the purchase price. Almost no buyers calculate the true annual cost before committing. In most markets, the true annual cost of owning and running a vehicle is between 40 and 70% of the purchase price in the first year alone. On a $16,500 car, that is potentially $6,600 to $11,550 in year 1, when you include all costs. If that number does not fit your budget, the car does not fit your budget, regardless of what the monthly payment is. the financing structure specific to used cars. Used car financing, particularly through dealerships, typically carries higher interest rates than new car financing and significantly higher rates than personal loans or credit union loans for the same purpose. In many markets, in 2026, used car interest rates through dealership financing can run between 8 and 15% depending on your credit profile. A $13,500 loan at 12% over 60 months costs approximately $3,000 in interest above the principal. The same loan through a credit union or direct bank lender at 6% costs approximately $2,100 in interest. Financing source alone can save or cost you $1,000 on a single car purchase. Most buyers accept the dealership financing without comparing alternatives. Let me show you two versions of Tyler's car purchase. Version 1. What actually happened? Tyler buys the $16,500 car, puts $3,000 down, finances $13,500 at 9.9% through the dealership for 60 months. Total loan repayment, $17,100. Total paid for the car, including down payment, $20,100. No pre-purchase inspection. Timing belt replacement discovered after purchase, $900. Insurance at current rate, $1,440 annually. Fuel, registration, maintenance average, $2,800 annually. Parking, $2,160 annually. Year 1 total cost of vehicle, approximately $27,400 when including the car purchase and all annual running costs. Over 5 years, true total cost, including depreciation of the vehicle from $16,500 to an estimated $8,000 value, approximately $52,000. Version 2. What Tyler does with the right information. Tyler researches before he goes to the dealership. He gets pre-approved for a loan through his credit union at 6.2%. He knows his number before walking in. He finds the same category of car, 5-year-old reliable compact, but specifically targets a private sale through a reputable platform rather than a dealership. He finds a comparable vehicle for $14,200, $2,300 less than the dealership car. He spends $150 on a pre-purchase inspection by an independent mechanic. The inspection reveals the timing belt situation. He uses this to negotiate $700 off the asking price. Final price? $13,500. He puts $3,000 down. Finances $10,500 at 6.2% for 48 months. Total loan repayment, $11,780. Total paid, including down payment, $14,780. He shops insurance with 3 providers before buying. Saves $38 a month versus his first quote. Year 1 total cost, approximately $23,500. Over 5 years. True total cost, approximately $41,000. The difference between version 1 and version 2, approximately $11,000 over 5 years. From research that took an afternoon and a $150 inspection. Same car category, same need, same budget, and completely different outcome based on information and process. Here is the exact process for buying a used car without getting the expensive version of the outcome. Step 1. Calculate your true monthly budget before you look at a single car. Not the payment you could manage if pushed. Your actual number. Take your monthly take-home income. Subtract all fixed expenses. Look at your real monthly surplus, which you calculated if you did the finance organization session from our previous video. The total monthly cost of vehicle ownership, payment, insurance, fuel, parking, estimated maintenance should not exceed 15 to 20% of your take-home income. For most people, this is a firmer constraint than they expect. Use this number to set your maximum car purchase price before emotion enters the process. Step 2. Get financing sorted before you visit any dealership. Contact your bank or credit union before you start looking at cars. Ask what rate you qualify for on a used vehicle loan of approximately the amount you are considering. Get a pre-approval letter if possible. This does three things. It tells you what the real cost of borrowing is before anyone tries to sell you an alternative. It gives you negotiating power. You are a cash buyer from the dealership's perspective, which changes the dynamic entirely. And it removes the financing conversation from the emotional moment of finding a car you like, which is exactly when your judgment is most compromised. If the dealership offers you a better rate than your pre-approval, take it, but only if the numbers are genuinely better after accounting for any fees or conditions attached. Step 3. Understand the private sale versus dealership trade-off honestly. Dealerships are more expensive for a reason. They typically offer some form of short-term warranty, have processed paperwork, and provide a layer of accountability that a private seller does not. Private sales are cheaper for a reason. There is no warranty. The transaction is between you and an individual. The due diligence is entirely your responsibility. Neither is automatically better. But the price difference, typically 10 to 20% on comparable vehicles, is the cost of the dealership's accountability layer. Decide whether that accountability is worth that cost to you based on your mechanical knowledge, your risk tolerance, and whether you are buying with or without an independent inspection. Which brings us to step 4. Step 4. Always pay for a pre-purchase inspection. Always. This is the most consistently overlooked step in used car buying and the one with the highest return on $100 to $200 you will ever spend. An independent mechanic, one with no relationship to the seller, will put the car on a lift, inspect the engine, transmission, brakes, suspension, tires, fluid levels, and computer diagnostic codes, and give you a written report on what they find. What this inspection does: it reveals problems the seller may not have disclosed. Not always deliberately hidden. Sometimes they genuinely do not know. It gives you negotiating leverage. Any issue found is a reason to renegotiate the price. A $600 brake job required within the next 6 months is $600 off the asking price. If you know about it, it gives you a walkaway reason. If the inspection reveals significant structural damage, a rebuilt title issue, or problems that exceed the value of the purchase, you walk away. A $150 inspection that saves you from a $4,000 mistake is one of the best returns available anywhere. If a seller refuses to allow an independent inspection, that is not a difficult personality. That is information. Walk away. Step 5. Research the specific model's known issues and ownership costs before viewing. Every car model has a community of owners online who discuss its known issues, common failure points, and typical maintenance costs at various mileage marks. Spend 30 minutes before viewing any specific car reading forums, owner groups, and reliability data for that exact model and year. You are looking for 3 things. What are the common failure points at the mileage on this car? What do those repairs typically cost? Is there a known issue with this model at this age that the asking price does not reflect? This information, which costs nothing and takes 30 minutes, can tell you whether the $14,200 asking price on a car with 80,000 kilometers is reasonable, or whether this particular model is known to have a transmission issue that typically manifests at exactly 85,000 kilometers. Step 6. Negotiate on total price, not monthly payment. This is the dealership trap that costs buyers thousands. Salespeople are trained to move the conversation to monthly payment. What monthly payment works for you is a question designed to let them extend the loan term, increasing the total you pay, while keeping the monthly number within your comfort zone. Always negotiate the purchase price first. Agree on a number. Then discuss financing separately. A car at $15,000 on a 48-month loan costs less total than the same car at $15,500 on a 60-month loan, even if the monthly payment on the longer loan is lower. Total price, then payment structure, never the other way around. Step 7. Calculate total cost of ownership before you sign. Before signing anything, do this calculation for the specific car in front of you. Monthly payment times number of months plus down payment equals total purchase cost. Add annual insurance quote divided by 12, average monthly fuel cost based on the car's actual fuel consumption and your driving distance, estimated monthly parking, annual registration divided by 12, and a maintenance reserve of approximately 1% of car value annually divided by 12. Add all of those monthly numbers together. That is your true monthly cost. If that number fits your 15 to 20% budget guideline, proceed. If it does not, the car does not fit your budget, even if the payment does. Here is the reframe I want you to carry out of this video. A car is not an asset, with very few exceptions. A vehicle loses value from the moment you own it. It is a consumption item, a necessary one for most people, but a consumption item, which means the financial goal when buying a car is not to get the best car you can afford. The financial goal is to meet your genuine transportation needs at the lowest true total cost over your ownership period. Sometimes that means spending slightly more upfront on a more reliable model to avoid higher maintenance costs over 5 years. Sometimes that means buying a car that is significantly below your maximum budget, using the gap to accelerate debt repayment or investment contributions. Sometimes it means keeping a car that has been paid off and costs you nothing in financing, even when newer options feel tempting. Because a paid-off car that costs $150 a month in maintenance is cheaper than a $280 monthly payment on something new. The car should serve your financial life, not consume it. Tyler drives a car. He does not need to perform a financial identity through it. And when he understands that, the decision becomes much simpler. The used car market in 2026 rewards buyers who arrive prepared and punishes buyers who arrive excited. The information asymmetry is real. The financing trap is real. The gap between purchase price and true cost of ownership is real. And none of it is visible until you know what to look for. Now you know what to look for. Calculate your true monthly budget before you fall in love with a specific car. Get financing pre-approved before you walk into a dealership. Spend $150 on an independent inspection before you sign anything. Research the model's known issues before you test drive it. Negotiate total price, not monthly payment. Calculate total ownership cost before you commit. Tyler's version 2, the informed version, saved him $11,000 over 5 years. Not from a better deal falling into his lap, from an afternoon of research and a $150 inspection. The car you need exists, at a price that works, in a condition you can verify. You just need to arrive informed enough to find it, and confident enough to walk away from the ones that do not meet the standard. That is not being difficult. That is being a buyer who understands what they are buying. And in the used car market in 2026, that knowledge is worth exactly what Tyler discovered it was worth. Thousands of dollars and years of financial peace of mind. Drop a comment below and tell me, are you in the market for a used car right now? Or have you already been through a purchase that turned out to cost more than you expected? Tell me what happened and which step from this video you wish you had known about before you bought. I read every comment. If you know someone who is about to buy a used car and has not done any of these steps yet, send them this video before they sign anything. It might be the most useful thing you do for them this year. Subscribe to NuellaInvests. Every week, we cover the financial decisions that nobody briefs you on before you have to make them. See you in the next one.